Okay, so for those of you who are watching the recording, I forgot to record my introduction, but what I do want to say is that you're welcome to text me absolutely anytime with questions, and my phone number is in the course, and my introduction's in the course too. So this is our classroom. So there's a couple of things that I want you to be aware of. So first of all, I did something different this time. In the announcements, I have put, where are they? I have put there's announcements here that you can't see yet because I'm making them available as the weeks come up, so that you're not missing anything. There's announcements that you can't see. So what I've done is I have recorded, I've put good information here too, but I have recorded information about every learning outcome in the course. There's additional videos that are in our modules in our each week. I actually put those there. There's somebody else's. I had put them there before I recorded these, but I have recorded videos for absolutely every single learning outcome, and I recorded a lot of videos for like working the problems, which we're going to look at. So there's a lot of resources here that are short and easy to digest, and then you can go and apply them. And my hope with this is a couple of things. One is you'll have a place to go back and look at the material if you're wondering, or if you forget something, or if you're struggling with something. You don't have to go through a 2-hour-long, class lecture. You can go back and see by the topic exactly what would be most helpful for you. So that's one thing. And then the other thing is that I'm hoping that they will help you understand the basic concepts before we get together. And then we can spend our time working on more problems together. It's kind of like flipping the classroom, if you've heard that term. But it makes it where we have more time to work together and get into the harder stuff, and you have lots of resources that you can use. So these are some of your best resources because I've gone through and specifically looked at each thing. Then the other resource that you have, I told you there's a lot of stuff here that you can't see yet. The other resource that you have is when you go to each week and you scroll down, you're going to see the LearnSmart. So the first thing you do is you go in and you register for Connect. That's our lab. You only have to do that in the very beginning of this week. After that, you won't see that in future weeks. So LearnSmart is a tool that I'm going to say is actually optional for you. You can use it or not use it, and I will give you the points for it. But here's where it's beneficial. Everybody learns differently. So for some people, reading the book and watching the videos is great. For other people, working the activities is great. Where LearnSmart is really amazing is that it zeroes in on the pieces that you are struggling with. So if I was going to look at this as a student, it connects to the textbook, but it has audio content and asks you many questions as you go along. An example of when this might not be beneficial for you is like if you're studying something and you already have a background in it. So when you open this, you get to, it's like you can say, I think I know it, or unsure, and based on what you say and how you answer, the content will be adjusted for what you need to work on. So like the 4 major types of transactions that affect equity in a business are what accounts. So I know what affects equity, and you haven't learned this yet, but revenue, expense, dividends, and common stock. So I'm like, oh, okay, so I think so. Or you might say, I have no idea. Oh, I forgot to write something. So the expanding accounting equation, assets equal liabilities plus common stock plus retained earnings minus expenses, common stock, we broke it out, retain, and I say, okay, I think so. And now it's going to say, oh, instead of retained earnings, it should be revenue. And then if you're like, what? You can go to read about this. Yes, it does take a moment to load. And then it takes you exactly to the book, the part of the book that explains what it is that you're wondering about. And the little bubbles define terms. So this is where this resource is very helpful. All right, so that's LearnSmart. Now let me show you the next thing, the next resource that we have. So when we go down each week, these, the practice problems, you have unlimited attempts on these practice problems. So when we pull up the practice problems, everybody's going to have different numbers. So if I work them, my numbers are going to be different than your numbers. So when I go in here, you have unlimited attempts. The purpose of the practice problems is not assessment. The purpose of the practice problems is for you to learn the material. It gives you the opportunity to work with the material. So when I've pulled this up, this is one of the first things that if you watch the video, the accounting equation is the basis for the balance sheet. And assets always equal liabilities plus equity. So if assets are $740,000 and equity is $440,000, how much are liabilities? This is when you hit the space bar and you talk.
300.
300,000. So I'm going to put in here 300,000. Okay, so if assets are 540,000 and liabilities and equity, I think it says they're equal. Total assets and liabilities and equity are equal. How much are liabilities and equity?
Is it 270?
I think so. But here's how we can make sure. So I'm going to put in 270. So I'm thinking, okay, do I understand the accounting equation? Now, let's say that I wasn't sure. I have a couple of options. I can say, ooh, can you give me a hint? And when it gives you this hint, it pulls up an example like it, and there's a video. There's a video that talks about it. I can also say, ooh, would you take me to the ebook where it talks about this? And it will take you to the ebook, and you can link directly to where the material is that you're looking at. I'm going to stop it so it doesn't take too long. And then the third option that you have is you can say, check my work. So you're going to say, check my work. Oh, I love green X's. So, okay, so that's okay. Now, you do have to say, return to question. I know, even now the green X's make me happy. The green check marks make me happy. So you do have to say, return to the question, or you can't get back. All right, so then I'm going to say next. Okay, so let's work this one. So on the cash flow statement, the good thing is if you notice our flow of work in the course, we're doing chapter 1, 2, and 3 this week. And then next week, we still are doing chapter 3. And the reason is this week you're going to learn, you're going to go all the way through journal entries. By the end of week 1, you'll be able to take an accounting transaction and write it down as a journal entry. Next week, what we're going to do, and what we'll spend most of our time together doing, is practicing journal entries. We'll do more journal entries and we'll do adjusting entries. So we slow down in week 2. At the end of week 1, you'll feel overwhelmed. We slow down in week 2, we practice more journal entries, we do adjusting entries, and that's all we do. And so in week 2, you're doing chapter 3 and chapter 12. But chapter 12 is only the cash flow statement. And everything that you have to know about the cash flow statement, you're actually going to learn this week, because the only thing you have to know from the cash flow statement is what types of transactions go on it. That is it. You don't have to be able to do one. So we have the balance sheet that has assets and liabilities. We have the income statement that has revenue and expenses, and we have the statement of owner's equity that has revenue, that has retained earnings, beginning retained earnings, net income, and dividends. So you need to be able to go through here and tell me what kind of account each one of these is. Now, several people said in the when they were doing their introductions to the course that this material is like learning a foreign language. And that's what I say too. It's exactly like learning a foreign language. And there's a couple of things to know about this. One is that it's really helpful if you work on the material little by little throughout the week, because it's not the same if you sit down at the end of the week and you spend 10 hours on it. So I tell my students, it's kind of like if you were learning to play the piano. You wouldn't say, I didn't have time to practice it all during the week, but that's okay because I'll just practice for 8 hours on Saturday. It wouldn't work. And it's the same thing with this. It doesn't work. So a lot of what you're doing in week 1 is you're learning this new language. So in this language, we want to say what financial statement item is going to appear on the income statement, the balance sheet, the statement of retained earnings, or the cash flow statement. So anytime you see something that says cash from operating activities, what statement do you think that is going to go on? Balance sheet, cash flow, equity in the cash flow statement, or the income statement?
Cash flow?
Yeah, it's going to go on the cash flow statement. Okay, factory. So what type of account is factory? Factory is an asset. An asset is something that we have that's going to provide a future benefit for us. So just like a car is your asset, factory is an asset. So which financial statement do you think an asset goes on? The balance sheet, the cash flow statement, the equity statement, or the income statement? Think about the accounting equation. The accounting equation is the balance sheet. So the balance sheet is assets equal liabilities plus stockholders' equity. So on the balance sheet, we're going to have assets. So where do you think you're going to find factory?
Balance sheet.
Balance sheet. Okay. So land. Land is also an asset. It's something that we have for the future benefit. What financial statement is land going to go on?
Balance sheet?
Yep, the balance sheet. So see, this is doable. Do you see how this works? Okay, dividends. Dividends are something that is given back to the shareholders in a company. So dividends by definition are given back to the shareholders out of their equity in the company. So when I talk about dividends, they have to go, they're on the retained earnings or the equity statement. They happen to also be on the cash flow statement. We're going to go look at some examples of the statements. So utility expense. So this is an expense. Expenses go on the income statement. On the income statement, we have revenue minus expenses, and that tells us what our net income is. Just like if you were operating a business, when you make a sale, that's your revenue. When you spend money, that's your expense, right? And so what's left is your profit. Does that make sense? Yes, no, maybe?
Yes.
Yes.
Okay. Okay. All right. Because I know when you're quiet, I don't know, like, I know that we just started, and so some of you haven't had a chance to really look at any of the material yet. And so I don't want to confuse anyone. I want to kind of help you see the lay of the land, talk about it a little bit, but I don't want you to feel overwhelmed or confused, but I don't know if we're on the same page if you're not talking to me. Okay. So utility expense. What type of account do you think utilities expense is? And I'll give you a hint, it's in the words. It's an expense. What financial statement are you going to find expenses on? The income statement, the income statement. So retained earnings is what we have left in the business. After we have operated the business, this is what we have retained in the business. And the only place that we're going to see, you know, I just noticed they keep putting the answer at the top. This is really interesting. You're going to see retained earnings on the balance sheet because it's equity, and you're also going to see it on the statement of stockholders' equity because that statement is beginning retained earnings plus net income minus dividends gives you ending retained earnings. When you're working through the videos and you're working through the book and you're taking notes, you should jot down the bare bones of the financial statement. So you should have balance sheet is assets equal liabilities plus equity. Income statement is revenue minus expenses equals net income. Statement of equity is beginning retained earnings plus net income minus dividends is ending retained earnings. That helps you get the language down. So tax expense. Tax expense is an expense. What financial statement do you think you're going to find tax expense on? Income statement?
Income.
Yep. Delivery expense. Where do you think you're going to find delivery expense?
Income statement.
Income statement also. And then a net decrease or increase in cash, because we're just talking about cash. Where do you think you're going to find that?
Cash flow.
Yep. And now I'm going to go over here and I'm going to say, check my work. Yay! Green checks. I love green checks. It's like shopping for school supplies. I still love shopping for school supplies. Okay, now we're looking, is it revenue, is it expense, or is it dividends? So revenue has to be earned by operating the business. Expenses are incurred through operating the business. Dividends are something that we have retained in the business that we give back to the owners. Even though it's cash that we're taking out of the business to give back to the owners, it is not an expense because it's not part of operating the business. Expenses and revenue have to be part of operating the business. So we want to figure out, is each one revenue, expense, or a dividend? So if we've received rent, is that revenue, expense, or a dividend?
Revenue.
It's revenue. Rent received is revenue. What category do you think dividends paid goes in?
Expenses.
How about dividends? It seems like an expense because we're paying it out. And you're right, we're writing a check, we're paying it out. It's the only time that we pay something out like that where it isn't an expense. And the reason it isn't an expense is because it's not part of operations.
Okay, makes sense.
Advertisement. If we do advertising, we might also call that what?
An expense.
An expense. So we would probably call it like advertising expense. What type of account do you think postage is? Revenue, expense, or dividends?
Expense as well.
An expense. Yep, it's an expense also. I'll turn my chat pod on. Okay, so if you have a company that has common stock, then when you give money back to the owners, it's called a dividend. If you have a company that isn't one with stock, it's not a corporation, if you have any other company, then the money that goes out and back to the owners is called a withdrawal. So it's called an owner withdrawal. So they work exactly the same, except for if the company is a corporation, then the stockholders buy common stock and they receive dividends. If the company is anything other than a corporation, then the owners make contributions and they take withdrawals. So an owner withdrawal is similar to revenue, expense, or a dividend. Something that isn't part of operating the business, but we've taken out of the business.
A dividend?
It's a dividend. Yep. In order to sell something, we have to make purchases. Like when we make a purchase, it's going to be, so that we can sell. So if we purchase something, is that revenue, expense, or a dividend?
Expense.
Yep. Sales, when we make a sale, is that revenue, expense, or a dividend?
Revenue.
Yep, it's revenue. And then this last one, fees earned, part of it is learning our little accounting bubble language. So when we say fees earned, we're talking about, when I hear fees, I think expense, right? But the earned part, what we're really talking about is something that we've earned for doing work. So fees earned is going to be something that we've earned. And yes, Mark, it's going to be revenue. Okay, so that's not hard, right? It's new. All right, now we're going to say, are these assets, liabilities, or equity? So when you take the accounting equation, assets, liabilities, and equity, when you're looking at, I'll go back and show you in a minute, when you're looking at the course announcement, I have one where I have the entire accounting equation, and then I have all the accounts, a lot of the accounts that go under each part of the equation. And when you look at equity, the reason the accounting equation includes everything, you're going to take every transaction and apply it to the accounting equation before we ever do journal entries. And the reason this accounting equation you can apply every transaction in total to it is because there's 4 pieces under equity. If I had a business, when I sell something, that revenue, do you think it increases or decreases my equity in the business? Do you think revenue increases or decreases my equity in the business?
Increases.
Increases. So revenue is part of equity. Revenue increases my equity. When I have an expense, do you think that increases or decreases my equity?
Decreases.
Decreases. So there's 2 pieces of equity. One of them is retained earnings. And retained earnings is made up of your net income. So revenue increases it and expenses decrease it. The second part of equity is what is contributed or withdrawn from the company by the owners. So common stock or capital contributions, do you think those increase equity or decrease it?
Decrease it.
If an owner makes a contribution into the company, it increases their equity. And it's funny because when a company sells stock, a lot of people think, oh, well, we sold the stock, so we gave some of the equity away, we reduced equity. But what really has happened is when we've sold the stock, we have increased equity because the more stock that we sell, the more money gets contributed by owners to the company, and that's equity. So common stock is equity. It increases equity. And when an owner makes a capital contribution, it increases equity. Then the opposite is true for dividends. If I pay out dividends, I'm reducing equity. If I take a withdrawal as an owner, I'm reducing the equity in the company. So accounts receivable, what type of account is accounts receivable? An asset, a liability, or equity? You got it, Michelle. Michelle's right, it's an asset. Accounts receivable is an asset. And these things don't come automatically. These things come with practice. Wages payable. So if it's a payable, it means I'm going to pay it out. These are wages that I owe somebody. I'm going to pay them later. Is that an asset, a liability, or equity? Michelle nailed it again. Wages payable. A payable is going to be a liability. Supplies. Is supplies an asset, a liability, or equity? Good job, Mark. Supplies is an asset. There's a future benefit in those supplies. I'm going to use them for the future benefit of the company. Equipment. Is equipment an asset, a liability, or equity? It's an asset. My equipment, the machinery, or the vehicles, or the furniture, all of those things have future value for the company. A note payable, that's something that we're going to pay back, like the note on your car loan. A note payable, good job, Mark. A note payable is a liability. And what about furniture? Asset, liability, or equity? It's an asset. Perfect. Okay. See, you're getting the hang of this. We're going to do the same thing. Assets, liabilities, or equity. Taxes payable. Asset, liability, or equity. Taxes payable, I'm going to pay it out in the future. Good job, Mark. How are the rest of you guys doing? You can type in the chat pod or you can talk. Taxes payable is a liability. What about supplies? Is supplies an asset, a liability, or equity? Wow, they're doing it again. This is so weird. It's an asset. Supplies is an asset. What about interest payable? Interest payable, I'm going to pay this interest in the future. I have a loan and I'm going to pay the interest later.
Liability.
Perfect. It's a liability because I'm going to pay it later. Accounts receivable is money that customers owe us from like purchases that they've made from us. So accounts receivable is
Asset.
okay, it is an asset, but let me explain about equity. So because that's an interesting thing. Every transaction has at least two pieces. So with accounts receivable, the other side of it is sales revenue. So like we would record sales revenue and accounts receivable. So the sales revenue piece increases equity. The accounts receivable piece increases assets. And what we're going to see is that with the accounting equation, it balances. That's the next piece that we're going to see. Okay, prepaid rent. Prepaid rent is an anomaly. There's two anomalies, and prepaid rent is one of them, and they're in red on my course announcement, and I talk about them. So prepaid rent is actually a liability. It's the prepaid rent is an asset. It's a prepaid expense. So what's happened is we paid rent in advance. So let's say we are renting a building, and you know how you have to pay like the first month and the last month's rent? So we've paid this 2 months of rent. It becomes an expense when we actually use the building. So at this point in time, we've paid the rent, but we haven't used the building yet for that period of time. So it's an asset because whoever owns the building owes us something. There's a future benefit. Either we have the future benefit of using the building for that period of time, or we have the future benefit of they're going to give us our money back. So a prepaid expense, in this case, is prepaid rent. There's other ones we're going to look at. Prepaid rent is actually an asset because we have a future benefit because we paid something in advance. Does that make sense?
Yes.
Yes.
All right. Dividends, asset, liability, or equity?
Equity.
Equity, yay. Prepaid parking, same thing. We paid parking in advance.
Asset.
Yep, it's an asset. Common stock, asset, liability, or equity?
Equity.
Yep. Prepaid service fees, I'm not sure what they mean here. Hold on one second. Because they're not calling it unearned revenue. I'm trying to trick you. Okay, good. It is the other. Okay, so prepaid service fees. We've paid something in advance again, just like the prepaid rent and the
Asset.
prepaid parking. It's an asset. There's something called unearned revenue that we're going to talk about in a minute. So the prepaid expense is the only account that might say expense that isn't an expense. The other side of that is what's called unearned revenue. So unearned revenue is the only account that says revenue that is not revenue. Unearned revenue happens when we take money from a customer, but we haven't performed the service yet. So for example, in my cushion manufacturing business, Hilton might write us a $20,000 check for a $40,000 cushion job. When they write me that check for $20,000 and I agree to make the cushions, have I earned any revenue?
No.
No, I have not. I have not earned any revenue. What do I have to do to earn revenue with them? I have to fulfill the order, right? I have to make the cushions and give them to them. So I haven't earned any revenue until I do that. So that $20,000 that they've given me, I'm going to put it in the bank, of course, but it's a liability. Unearned revenue is a liability. It's a liability because I owe something. I either owe whatever service or product I've told them that I'm going to give them for that money, in my case, cushions, or they're going to want their money back. So unearned revenue, when I take a deposit, is a liability. All right, there's a video I did with these four. There's a few questions on the quiz that make it important, but matching them as principle, assumption, or constraint, you're not going to have to do on the quiz. You have to know what they mean. Okay, we want to know, are these, I'm trying to move my chat pod. Okay, I'll close it for a minute. A chart of accounts is a list of all the accounts in the ledger. It doesn't have their balances. We want to know, are these asset, liability, equity, revenue, or expense? So here with equity, unless they're combined, here because we're doing revenue and expense, equity is going to be like common stock or dividends, like that. So notes payable, asset, liability, revenue, pulling up my chat pod. Notes payable is a liability. I owe money. Interest earned. I've earned money.
Revenue.
Yes, it's revenue. Yay! Common stock. Asset, liability, equity, revenue, or expense?
Equity.
Equity. Accounts payable.
Liability.
Yep. Rent revenue. Asset, liability, equity, revenue, or expense? Rent revenue. It's revenue, right, Mark? Yep, it's revenue. Good job. Supplies expense. Asset, liability, equity, revenue, or expense. Right, Mark? Go ahead.
Expense.
It is. Postage expense. Asset, expense, yep. See, are you getting, you see a trend here? Patents. Mark, you're right. That's good. Patents are an asset because it's something that we have a future benefit from. Rent receivable. So we haven't received it yet, but we're going to. It's owed to us. Rent receivable. You're right, Mark. You're good at this. Rent receivable is an asset because there's a future benefit to us. Okay, we haven't done debits and credits, and I feel bad about Thanksgiving being on Thursday. It's a really bad week to have Thanksgiving. But here's what I would like you to do. So when you get there, the video on debits and credits, if you get into this, yeah, let me show you. I'm going to show you a little bit so that you have something to work from. So when you get into this, if you are struggling this weekend, I'm going to give you some tips. You're welcome to text me. Okay, so I'm going to debits and credits here. Hold on, I don't have the chat pod up. And so what I want you to do is a couple of things. So first of all, there's nothing about this that you're going to memorize. Everything about this is something that you're going to be working with, and you should have, I'm going to show you which, there's a sheet that you should print out where you have it next to you, because here's the thought process that you're going to go through. I'm going to show you debits and credits. I'm going to tell you the thought process. It's on the video also. So the first thing about debits and credits is, unless you already know something about debits and credits, forget what you think you know, and instead just focus on what I'm going to tell you. And what I'm going to tell you is that debit means left and credit means right. I mean, you've already seen that we have this way of making things complicated, right? And we use all these complicated words, right? So this shouldn't be a surprise to you. Debit means left and credit means right. The other thing that I'll point out, because I didn't notice it until somebody asked me when I'd been teaching for 5 years, you'll notice that debit and credit are both abbreviated by DR and CR. And if you look at debit, you notice there is no R there. I actually didn't notice that. I was just doing what I was told, like a dutiful little student, just writing it down and never asking questions. And I didn't notice until somebody asked me, and then I was really surprised because, of course, there is no R there. So I had to go back and find out why. Well, it's because it actually comes from the Latin term debere and credere. So that's why it's DR and CR for the abbreviations. So, right, see, in case you're like my daughter, and you won't be able to figure it out until you understand these things and they make sense. So debit means left and credit means right. So what you're looking at on the screen right now is a tool in accounting called a T account. In your textbook, we use it a lot, like in the beginning, to accumulate balances in accounts like the general ledger, but in the real world, we really use it as a tool to see the flow of dollars coming in and dollars going out. Very much the way we're going to use it next week when we do adjusting entries. So the way this works is the account title goes on the top, and then depending on whether you're debiting or crediting, you put the numbers on the left side or the right side. So this is the accounting equation. Now, looking at it at a macro level, we have assets, liabilities, and equity, and you can see that assets are increased with the debit and decreased with the credit. Now, no matter how long you look at that and try to figure out some logical reason why it works this way, you're not going to find it. All you can do is just look at it as you're doing it, and you will learn it as you keep going. If you're going on in accounting, I wouldn't expect you to know it, even if your major is accounting. I wouldn't expect you to be comfortable with this until probably toward the end of intermediate 1, unless you work with it an awful lot. Liabilities are increased with the credit and decreased with the debit. And so is equity. But we're going to notice something interesting about equity when we expand the accounting equation. Now, the other thing is, notice that it says normal where the increase is. If I asked you what is the normal balance of an account, what I'm looking for is either debit or credit. And the idea behind that being the normal balance is if I was looking at an asset, like let's say I'm looking at, equipment, and I saw a credit balance, that's not normal. There's something wrong, because I can't have less than no equipment. It should be a debit balance always, ultimately. Now, that doesn't mean I don't credit assets, because I certainly use assets, right? But the total balance at the end should be whatever the normal balance in the account is, but that's what normal balance means. This is the sheet that you should print, laminate, stick in your book, and then anytime you're doing work, the quiz, the homework, the practice problems, anything, you should be looking at this. Now, when we expand this, we still see that assets are increased with the debit and decreased with the credit. On the other side of the equation, it's the opposite. So liabilities are increased with the credit and decreased with the debit. Now, for equity, equity in general is increased with the credit and decreased with the debit. So that's what happens with common stock, and that's what happens with revenue. Dividends and expenses behave in the opposite way, because what do dividends do to equity? Do dividends increase or decrease equity?
Decrease.
They decrease it. Dividends decrease equity. So they behave in the opposite way. They're going to be increased with the debit and decreased with the credit. Expenses also decrease equity. So they're going to behave in the opposite way. They're going to be increased with the debit and decreased with the credit. Now, here's the thought process that you're going to go through. Well, I'll tell you in a minute. All right, this is a T account. If I asked you, how much cash do you have right now? How many numbers am I looking for? How much cash do you have? What's in your pocket? How many numbers am I looking for?
4,800.
300. But how much money? I mean, how many numbers? One number, two numbers?
4.
No. What if I said, how much money is in your bank account? How many numbers am I looking for? What's the answer? How many numbers is in the answer?
One.
And always
One.
0.
Right, but that's still one number.
One. Okay.
I'm looking for one number. Like if I said, how much money is in your purse? You wouldn't say, well, when I left home today, I had $20, and then I went to the gas station and I spent $5, so then I had 15, and then I went, you're going to go, just a sec, oh, I have $8. One number is the answer. So when I'm looking at this T account, I'm figuring out what is the balance. So cash is an asset. An asset is increased with a debit and decreased with the credit. So I got an owner made an investment. I increased cash 30,000. I got consulting fees. I increased it another 4,200. I collected a receivable. I increased it 1,900. These are all of the decreases for supplies and equipment and rent. Those are all the things I spent cash on. So to get my balance, I'm going to say, okay, there's $36,100 that I increased in cash, and I spent $31,300. So I have $4,800 in cash left, and it's a debit because the 36,100 is bigger than the 31,300. So my balance is 4,800. Does how the T account work make sense?
Yes.
Okay, so when you're doing a T account, it's a tool and we're looking for one number. I'm gonna skip through this. All right, so when we're doing a journal entry, you are going to think about 5 things. And I say this on the video, but this is what you should write down for the weekend. The first thing you ask yourself is, what happened? So Fast Forward receives $30,000 cash from Chas Taylor in exchange for common stock. What happened? A lot of people miss the transaction because they don't really understand what happened. And it's harder in the accounting world because you didn't live through it, right? So what happened? Somebody came in and they invested $30,000 in exchange for stock. So I got $30,000 and I sold him stock. So number 1, what happened? Number 2, what accounts are affected? Number 2, what accounts are affected? And by that, I don't mean the type of account, I mean the exact account name. So here, cash, I got cash, and common stock, I sold common stock. So the 2 accounts that are affected is cash and common stock. And if I was doing this, I would be writing down cash, common stock. All right, number 3, did each account increase or decrease? Did each account increase or decrease? Did cash increase or decrease? Which one? Here, did cash increase or decrease?
Increase.
It increased. We have more. We have $30,000 more that we didn't have before. So cash increased. What about common stock? And we talked about this before because common stock's tricky. Did common stock increase or decrease?
Increase.
It increased. It also increased. So cash increased and common stock increased. So on my piece of paper, I would be writing a little up arrow next to each of them. I like arrows better than plus and minus. So number 4, what type of account is each? What type of account is each? That's where you ask yourself, okay, cash, what type of account is it? Is it an asset? Is it liability? Is it revenue, expense? What type of account is cash? What type is it?
Asset.
An asset. So then I'd write next to it, okay, asset. What type of account is common stock?
Equity.
Equity. So I'd write equity, EQ, next to it. All right, now number 5. Do I debit or credit? Number 5 is, do I debit or credit? This is when you now take that sheet that you're looking at, you go back to that resource sheet, and you say, okay, I have an asset that increased. I don't care that it's cash anymore. I have an asset that increased. Do I debit it or credit it? If I increase an asset, I debit it. I have equity that increased. If I increase equity, I credit it. So I'm going to debit cash and credit equity. So here it is in my T accounts. I debited cash and I credited equity. And this is what the journal entry looks like. So the debit is to the left on both. The credit is to the right, right? And this tells me that I increase cash by selling common stock. But if you take those 5 questions and go through that thought process, you will be more successful. And if you keep that, I used to call it a cheat sheet, but it really isn't. That's kind of a negative connotation. But if you keep that sheet with you and look at it, that will help you answer them correctly and learn it correctly. Okay.
Can you repeat number 3 again?
Yeah. What happened? Did they increase or decrease? What did they increase or decrease? Did each account increase or decrease?
Thank you.
So number 1 is what happened. Put it in your own words. You think you understand it, but when you try to put it in your own words, sometimes you realize you don't. Number 2, what accounts are affected? Cash, accounts receivable. Number 3, did they increase or decrease? Number 4, what type of accounts are they? And number 5, do I debit or credit? And that's in the video too on this. Okay, so who said this was confusing when they did it? I would expect it to be confusing. Does that help? Yes, no, maybe? Go back to our class. So if you go to the announcements, which by the way is where I'll post this video. If you go to the announcements and you don't see a lot of these, so don't be confused. So this is where the principles and assumptions are. This is where the accounting equation is. This is where the financial statements are. And this is where you do journal entries. This is where you'll see the thought process again. And then this is actually a review for the quiz. Shoot, why does that say week 2 quiz? I better check that. I'll check that in the morning. So when I do the quiz review, I'll show you what this looks like. I walk through literally every question on the quiz with different numbers. There's one that's blank so that you can work through it yourself if you want to, and then there's one that has notes. And the notes go with the video. Oh, normally it's in PowerPoint. I forgot this first one isn't. So here, there's literally every single question on the review is exactly like a question on the test. So you can go all the way through this, and there's one that's blank so that you can work them yourself, but and the video goes through the thought process. So there's a complete review for the quizzes. All right, now a couple of things that I haven't shared that I will. Stop sharing my screen. Okay, so yes, a bit. Okay, good. The deadline for the paper. The deadline for the paper, if you turn it in by the last day of class, that's okay. You don't have to turn it in the week before. I know that deadline's there. It's because everybody uses my course outline, so I just tell people. You don't have to turn it in until the last day of class. Also, on the paper, don't think about it yet. You can't possibly work on the paper yet because there's too much of the basics that has to be done in the first 2 weeks. So at the beginning of week 3, we'll discuss the paper, and then you'll feel better about it. Right now, don't think about it. And I'm someone that does everything as far in advance as I can. Don't think about the paper right now. The quizzes. The quizzes say you have to take them on Sunday. You don't. You can take it anytime you want, but please take it before class on Tuesdays. Preferably, you'll take it by Sunday night. I know this weekend could get a little bit crazy. So if you're traveling, if you've got family in, all of that craziness, wait until Monday or Tuesday to take it if you need to. It's fine. You don't even have to ask. Just wait. It's very important when you take the quizzes that you're able to find a quiet period of time to do it, because you cannot start and stop the quiz the way you can the homework. However, you can take it at any point in time that you want. The homework, you can enter and exit, enter and exit, enter and exit, and an indefinite number of times. I have to transfer the homework grades, so you won't see them in the grade book until wait, that's not true anymore. That's not true anymore. You will see them in the grade book. So that also means when you start the homework, it'll start out with a low score, and then as you work it, it keeps going up. So don't be alarmed by, especially like in week 2 when you're like, oh, I have an A, and then you open the grade book and you're like, what? It's because when you started the homework, it gave you a low score, and it'll increase as you work on it. Yeah, so all you have to know right now is you can call me, you can text me. Don't worry about the time zone. If it's late, text me. If I'm up, I'll talk to you. If I'm not, I'll talk to you the next day. You can reach out to me over the holidays. That's fine. You're going to wait to take the quiz if you can't find a quiet space over the weekend because of family. And you can take the quiz whenever you want. You don't have to just take it on Sunday. All right. Are there any questions for right now other than you're feeling overwhelmed, which would be normal?
Is class only on Tuesdays, like through video chat, or is it on a daily?
We're going to do Tuesday and Thursday normally.
Okay, thank you.
But instead of holding, and I actually did this 2 months ago, and I didn't hold any live chats, and the grades were still better than when I would talk for 2 hours twice a week because of the videos. So
I have a question.
Mm-hmm.
Now, what if we can't attend? I work on Thursday nights.
That's fine. I post them.
Okay, and do we need to, are we doing
No.
this also for points? Or?
Nope, they're optional.
Okay.
They're
All right,
optional.
thank you.
But if you stop attending, I'll stop attending. I mean, in general, the whole class, not you specifically.
Yes.
You can work. you can work. I literally did this in October, and I did all of the recordings, which actually took longer than lecturing, but I did all of the recordings because all the research shows that recordings really shouldn't be longer than 5 or 10 minutes. So I tried to keep them as short as possible. And that way you're not looking through like 2 hours. Also, my son goes to school online, and so does my daughter, but he was listening to his history teacher, and he was interested in the subject. He'd missed the live lesson, and so he's listening to this recording, and he's sitting next to me, and I'm working, and this is like droning on and on and on, and after like 30 minutes, you're getting sick of it, and after 45 minutes, you're really perturbed, and at an hour, it's just like, shut it off, just shut it off, if she's still talking. So I really think the videos are a better way of learning the material and being able to access it. But all of our recordings will be posted, so you'll have access to them. And if you have questions, Janelle, or anybody else, you're welcome to text me. Okay, I know that everybody has different schedules, so I don't feel like, oh, you didn't attend, so you should get it from that. You're welcome to text me. I'm happy to talk to you. We can also one-on-one share screens like this. Like if you're struggling with something, we can share exactly the problem that you're working on and talk about it through Zoom. It's great. That's a good question. Are there any other questions?
That's it for me. Thank you.
You're welcome. All right. I would probably need the one on, that's fine. Ariel, that's fine. It really is fine. It's totally fine. Don't wait. If you're struggling with something or you have a question about something, okay, Mark, you want to call, can you type it, or do you want to call me after? If you're struggling with something, don't wait until you've been struggling with it for 2 days. Pick up the phone much earlier than that, because you can't get back that time, and usually I can help you pretty quickly and easily and get you back on track. So you're not in this by yourself. about the general journal and the practice work. The general journal. Okay, so when you do the journal entry, yeah, you can call me after. You can call me after. And then if you have a question, I'll probably post the answer too, because other people will also. Okay, so it takes a while for the video to process, so I'll either post it tonight or I'll post it in the morning. I'm going to let it start processing and I'll see how long it takes and when I go to bed. If you have questions, you're welcome to reach out. Other than that, have a really fantastic Thanksgiving. And I hope that with all of the stuff going on with school, you find some quiet time to enjoy your family also. It's really important. And other than that, I will see you next Tuesday at the same time. Okay?
Thank you. Happy Thanksgiving, everyone.
Thank
Happy
you. You as
Thanksgiving.
well.
All right, I'll see you. Thank you for coming tonight. I'll post it and I'll see you on Tuesday. Have a good weekend.
You too. Bye.
Thank you as
Good night,
well.
you
Bye.
guys.
Night.